Joining us right now, though, to talk about all of this is Opendoor CFO Carrie Wheeler. They just reported earnings. Carrie, it's great to see you this morning. I want to start, though, with the SPAC phenomenon, and you know, it just feels like the air has been sucked out of that entire universe, and perhaps in large part, Chamath was the king or is the king of all of these, and therefore maybe he's getting a disproportionate hit on all of this. But what's your take on what's happening here?
Andrew, thanks for having me. It's good to be here this morning. It's hard for us to speculate on the market. Certainly, there has been a sell-off of those high-growth technology stocks. We've not been immune to any of that. What we've been really focused on, though, is just delivering results, which we did in Q1 with our numbers. Revenue up 200%, record level of engagement across offers and conversion, record number of our market launches. We just want to deliver the numbers for shareholders. Ultimately, I think our stock price will follow.
So do you look at this as simply a phenomenon of tech companies? And of course, tech has gotten hit across the board. Or do you think that there's something else going on here in terms of investors and misalignments of interests, for example, around how the SPACs were put together in the first place?
So for us, as you said, we did a SPAC last fall, and it was the right vehicle to go public at the right time for Opendoor. And it's in the rearview mirror for us now. We are a public company. We're focused on building long-term shareholder value and building a great company for the long term. I think I put us in the bucket of high-growth technology companies. The SPAC market for us was just a way to access the public markets. And it worked out really well for us, frankly. We started at $10 a share. So we're down from 52-week highs. We have created a lot of value since going public in December.
But do you think, Carrie, do you think there was a misunderstanding when you went public and a misunderstanding when a lot of these companies effectively went public through this vehicle about the prospects, about what the actual business was, about the diligence process? I mean, do you think that that's part of what's happened here? I mean, the other component clearly is that the SEC has come out quite vocally about their own concerns about the SPAC vehicle.
You know, we were very deliberate in our choice to go public via a SPAC. And one of the reasons we were attracted to that as the right vehicle is that we were able to talk to the market about our long-term view on how our sector would evolve and how we would perform. We came forth with projections, which we have exceeded every single quarter since we went public. And we were very transparent about our business model and our vision and what we're going to achieve over time. So I think investors were very well informed, frankly, Andrew, about what we were all about and what we hope to deliver. And we are achieving those milestones so far.
What do you make of the position the SEC has taken about projections from SPACs in the future? So right now, I think there's a big question about whether companies will have the legal protection in a SPAC to make the kinds of future-oriented projections that you have relative to the approach in an IPO, where those legal protections effectively have made it very difficult for companies to come forward with future projections.
It was really important to us that we put forth a credible business plan. I can't speak to what other people are doing, but all that matters is what we are doing, is the numbers we put forth. As I said, we have met and achieved them every single quarter. You know, it's a very long journey being a public company. We're here now, and we just want to deliver our numbers.
We're going to have to run in a quick sec, but just tell us about the business housing market right now. Obviously, hot. The question is, you know, can your algorithms and everything continue to predict where things are headed better, for example, than some of the other guys that are now trying to be in the same space?
Given the fact that we have a record number of consumers showing up and asking us for an offer and a record number of them accepting the offers we're giving them, we feel very good about the competitiveness and the accuracy of the offers we're putting into the market right now. Consumers love our solution. It's simple, it's fast, it's certain. It's a much better way to transact for real estate for consumers. I'm sure you've bought and sold a home before. It's really hard to do, particularly in this market where it's a seller's market. It's hard to be a buyer. We're helping knit both those sides of the transaction together.
Shepard Smith here. Thanks for watching CNBC on YouTube.